Welcome to the Hedgehog and the Fox. My name's Alistair King. I am a commercial and residential mortgage broker, but generally focusing on commercial broking. I will work with businesses and business owners to get the most out of their banking. The way I like to work is understand the client, understand their business and needs, and then from that transition into a banking tender. That's my background. But James?
Yeah, fantastic. Look, my focus is more centered around residential, and I think we have a shared interest in all of the variables that go into that. And as you said, matching the right loan product with the right needs and all the things that a client would typically articulate as important to them.
Where it might be a good place to start is usually where a lot of clients will start their conversation with the banks. They will often have only one person they deal with at a bank. They might have gone once upon a time, many years ago, to various institutions, and they will find a relationship that they feel comfortable with and gel with. But then it turns into this dynamic of a power imbalance where the bank will often have overarching dominant power position, and a lot of clients and a lot of people I see will go to their bank and say, "Excuse me, Mr. or Mrs. Banker, I've got this situation, can you assist?" And the bank will always adopt put a risk hat on, and they will try to be very conservative in their mindset, and justifiably, they're looking out for their bank's balance sheet and making sure that their risk lens is on, and they're also after more revenue or as much revenue from their client as possible because that's their mandate. And so I suppose it's our job to come and assist our clients and try to amend that power imbalance, particularly provide them with guidance, support, and options about the best choices for them and their family.
And I think that the number of things that you mentioned there that are, I think, easy to unpack or would be interesting to unpack. One of them being the power imbalance. And I think it almost inherently comes from the fact that when you talked about how people approach relationships with the banks, often they will choose one bank. Because I think anybody who has dealt with banks knows it can be a little bit arduous. There's a lot of red tape, a lot of unknown quantities if you're not in the industry. So if you've chosen one, it's so easy to keep going back to that one contact or that one bank from familiarity. You don't want to go through the rigmarole over and over again. So it sounds like the power imbalance almost comes from you've only got that one option, you've only got that one choice, you've only got that one perspective, that one set of priorities, and that can unconsciously limit you.
Totally. It's like, you go to an ice cream shop and they can only sell vanilla ice cream. But you want to know, well, hang on,
what does Macquarie ice cream taste like? What is
exactly? And not only that, but you will often be never given the best rate. I've got a great recent example. A client went to their bank, Big Four bank, and they said, "Hey, I know I'm paying too much for my loan. I've got it's an investment, commercial property. You've got a great tenant, 25-year lease signed upon it, and I'd like you to do better." The bank came back and they said, "Look, best we can do is 5 basis points." I went away, did a little bit of work on the asset, did some financial analysis, and I presented them with a rate which was 60 basis points better than what they'd already have. $10 million, that's a lot of money, $60,000.
Any amount of money is better than no amount of money.
Exactly. And so the end outcome of this situation, their existing bank then immediately matches that rate and said, "No, we can get there." Of course they can get there. So this is where
what do you feel was the biggest factor in that person hitting a brick wall and you immediately unlocking a door to something else? What is it about approaching a mortgage broker that makes that so accessible and that's such an option?
I mentioned this power imbalance, and that is the critical component to unlock. And because I've come from a banking background where I understand the banks, the way they price, the way their policies, and that a banker's role is to extract as much revenue and make sure they've got the best terms as possible on the bank's side. But for a client, the client is saying, "Well, no, actually, I want the best terms for me."
Yeah.
And so really my role is to act as that intermediary with that professional background and ability to say, well, and challenge the bank and the bankers to where it's in that conflict point that you will find best terms, best rates, better covenants, and often more lending limits. bank's never going to go an extra 100,000 or 200,000 if they don't want to. If you're at that conflict point and letting a banker know, well, if you want to retain me as a client, this is what you need to do to get there.
And you mentioned that conflict point. Forgive me jumping in. That there's just there's some really interesting topics to tackle here. We were talking about what that conflict point or maybe that friction point represents, where there's those competing priorities of what you want to do is get the best rates for your client, get the best features and components of the loan, and a bank wants to be the most protective of their revenue and the most risk averse. So is that what we're sort of talking about with that conflict or friction point between
Correct.
those two things?
Absolutely. And it's always best to go with a loaded gun. And what I mean by that is that core part of my role is to test the market and ask the right questions at the market about, if you were to move, this was what the terms we could get. And then, confirm with their existing institution that their terms are off. And I think it's important for everyone at home to understand is that commercial lending is slightly different, but at the same time very similar to residential lending, which James focuses in on. And what I mean by that is that because banking is so regulated, a bank has to abide by certain criteria. And whether you're Woolies, Coles, an ASX 200 company, or for that matter, a global institution, or whether you're mum and dad with their first, start a new operation and just getting an overdraft, a bank needs to view each loan from the exact same standpoint. And what I mean by that is they need to equate what's called expected loss, and that's made up of two components being your loss given default, security, what's the security behind the loan, and then what's the probability of default, which is what is the cash flow and ability to service that obligation. And understanding those two components results in what a bank needs to park capital behind, and that determines the pricing. So where commercial lending is slightly different, it's not that like residential side where you present often a piece of security, which is a house, and the bank will say to you, this is the rate we can give you on that house, and
based on its inherent value, based on your
correct. And the art that you've got is your ability to go and find the best rate in the market and who's willing to do what based on a client's criteria, whether it be what industry they're in, etc.
And there's a lot we can unpack there
and we'll unpack that in subsequent episodes. But from a commercial side, there is every single loan is vastly different. Sometimes there's no security. Sometimes there's lots of security, no cash flow. And so being able to analyze, challenge a bank on those two components is quite important, which ties then into what are the terms we can get, what is the rates, what do we want to be at.
I think let me sense check my understanding, because I think there's some nuances here that are probably worth, for a layperson in commercial banking such as myself, worth examining further. So it sounds like there is potentially a little bit more flexibility in a viewpoint of a business or commercial loan, predominantly, as you said, because in something like residential, there is this entity that you are weighing value against, the property.
Yeah.
And that has a relatively predictable value in the eyes of the bank, in the eyes of the borrower and the industry in general. For something like a business,
value and predictable
cash flow. Yes, exactly.
Yeah.
And the flexibility in something like analyzing a business's value is where sort of the gray area occurs, where someone like you can step in with a great deal of expertise and say, this is negotiable based on these factors that might not have come to the forefront. So there's more of a conversation point about it.
Correct. And if you get a bad banker, and there are lots out there in the market, they will not give you the fair value that a business owner deserves. And recently we've just looked at a client where an existing client was being quoted 3%, not 30 basis points, 3% over what the rest of the market was. So, if you're only going for vanilla ice cream, you're probably going to pay for it. So what we do, we step in, we run banking tender processes for clients, and we find them the best transaction in the market. And the tipping point and killer punch of it is that clients don't pay us directly. We are paid out of a commission structure by the banks. if we are not able to show a client that we can help them, our business won't become viable. So,
We're
the
not
reason
trying
we
to
exist.
extract business from our clients. We're just trying to represent their best interests. It's the banks that we have the monetary relationship with, which makes it a lot easier.
Best interest is exactly the right word, where there's an absolute no-brainer to use us, and that's why so many people are using us. 70, I think the recent stat was over 80% of residential market is now using mortgage brokers. That's because everyone's going to their bank and they're saying, I know I'm paying too much, and they're saying,
what can I do about it?
Times are tough, we can't offer you any more. And so they'll go to a broker, and the broker will say, well, actually, you can do things about it. Commercial side at the moment is only 40%, often because you're dealing with larger entities and there aren't that many specialists in the commercial side. So I think we'll see that also move towards where residential market has gone, just because we add so much value.
Yep. And an analogy that comes to mind is, for someone like myself, I'm not a mechanic. I don't know a whole lot about cars, for example. So if I go to a mechanic and I only go to one mechanic, their word is gospel. I don't know to challenge that. I don't know if there is something better. I don't know if there's a better diagnosis that could be formed that's more cost effective for me. But if I bring a mechanic with me, they can definitely give me a much better insight as to what is going wrong, if that's a fair rate to fix the problem or to identify solutions. And for someone like a mortgage broker in the space, every mechanic in Australia, Sydney, New South Wales, whatever the analogy can be pushed to. So your understanding of that landscape is so much more comprehensive than someone like mine, who only knows the one person, the one place, and that I need to take their word at face value, just because of that lack of options or awareness about what all of the other features and connotations could be.
Correct. And then on top of that, even if you have that mechanic background, I often say to my clients, look, we've got some sophisticated CFOs who've been in the market a long time, and they will still come to us and say, hey, we've got this rate, what do you think? And then I'll have a look at it and say, look, it's good, but I think we can do better, and here's how we can do better. So even if you are you feel like you've tested it, I mean, the key there is, rather than asking a question about what to a bank and to several banks, what rate do you think we can get? It's actually always better to almost request and or demand, saying, these are the terms we're after. Are you in or are you out? Let a bank analyze, look at their numbers, and then more often than not, you will get a lot better result. Rather than saying, what do you think? I think it's always better to go with an opinion and say, this is the numbers we're seeing and this is the rate we're after. Would you like to participate? And finding great bankers is always key as well, who can move quickly, everything that customers want, which is good service, bank speed, quick answers, and bankers who want to believe in their business and will back them with key decision makers within the institutions.
Absolutely. And look, generating those relationships and having that understanding takes a huge amount of time. So for someone whose job is not in that core aspect of things, so CFOs, everyone from the business owners you described all the way to the CFOs, that's not their core business. And having that reach out process, or to build that network and to have that accessibility into the banking system, would take a career's worth of time. So despite their domain expertise, coming to an expert such as yourself or a mortgage broker in the field, it's an enormous time save and getting immediate access to a network that would take you huge amounts of time to otherwise generate.
Absolutely. And I think I always challenge clients. I say, look, if there's two ways to do this. Is I always invite them, feel free to reach out to whoever you want yourself, and then come to me and say, do you think this can be beaten? And I will then give them a quick yes or no. And more often than not, it is a yes, it can be beaten. And here's how we'll do it. So I mean, it's, there's no harm in having a conversation around it.
Exactly. It's a relatively cost-free conversation to have. You're using your expertise to understand the landscape. And the great part about what we do is that we can just be completely transparent and candid, saying, yeah, we were able to find something better, or no, we weren't in this case, but we'll absolutely keep an eye out. And just having that best interest relationship with the client that we're trying to provide a solution for allows us to do that.
Absolutely. And one of the key points you just mentioned there is trust and transparency. And people won't deal with us if banking is built on trust and relationships are built on trust. What you're very good at, James, is building trust, and because you're able to display that authenticity, which I think is so important in a relationship. Showing vulnerability, and people appreciate that, where they say, yes, okay, we understand that's how you like to operate, and yes, we will absolutely back you. So yeah, I think trust is that key word that you just drew on there.
And that could have its own drill down in its entirety. I mean, one of the blessings about this industry is we don't just look at sheets and numbers on a page. It's understanding the person that we're speaking with and empathizing and truly understanding their circumstance and what problems we're trying to solve, what advantages that we're trying to create. And I think understanding the person as well as the numeracy behind what they've described is a key aspect of our role. And I think that could have its own deep dive topic in itself.
Absolutely. And one of things you just mentioned was that vulnerability that a lot of clients feel. There's two people often that they will have to ask these sort of questions with. One is their accountant, and the other is their banker. The reality is that there needs to, often clients, if they go to their accountant, the accountant doesn't really have that expertise, and they go to their banker. The banker has the expertise, but they've got
their own lens and priority.
They've got their own lens and priority. So I think it's always important to have as many different people you can ask these questions, providing you with a wider range of options so that you're not stuck with the vanilla ice cream. And I think that's sort of why what we do is so important. And I really feel like we make a difference to individuals in their lives just through providing options, and so that they can focus in on what they are good at. They're a lawyer, they're an accountant, they
have their domain expertise.
They've got their domain expertise that I definitely do not. But where I can guide and assist is finding great bankers, sometimes who specialise in their domain expertise. So we've got a number of specialisations throughout banking, and that way you will get better outcomes.
Yeah, most definitely. I think it could have its own deep dive, but what you described as, rather than asking the question, what can you do or can you do better? That's immediately placing, again, you talked about that power balance. You're giving them the initiative. You're saying, I will trust whatever you say next, and that will probably be the end of it. But by you saying, this is what we're aiming for, that's coming from a much more, I'm informed about what is possible, this is what we're aiming for, and it's inherently telling them, we're going to be gunning for this, whether it's with you or with someone else. So it again shifts that power back a little bit more towards the client that you're representing. And I think it's just one of the aspects of your expertise that really makes a difference in getting those rates.
And it doesn't necessarily even have to be rates. I've got some clients at the moment who, particularly around covenants, that meant for those at home, often on the business landscape, you will have various covenants that sit behind a term sheet or a facility, whether it be ICR covenants, which means your interest cover, whether it be an LVR ratio, the security over the debt, or a leverage ratio, often with cash flow lens. And really making sure that the covenants meet your needs is very important. The last thing you want to be doing is setting yourself up for failure. And that's sometimes where a lot of clients actually get themselves into trouble, and we saw that with robo-debt scandals in the past, and part of the Royal Commission, which was, I think, really good, part of the Royal Commission was drawing out these issues where banks were putting small business owners, and particularly farmers, into loans they couldn't afford. And then when the covenants failed, they said, right, we're going to sell off your assets, and bad luck. You signed the document, but here you are, and you can't afford it. So we are going to sell your house and close down your business. And so making sure that you have the right person in your corner to pick on a few of these key points is very important. And really, that's our job.
Yeah, absolutely.
Awesome. So maybe just a few comments in closing. James, what are key points from you from this first conversation from the Fox and the Hedgehog?
I'm a man for analogy, so picking on this vanilla ice cream thing, for the vanilla ice cream lovers, that's fantastic. But even if you are heart set on vanilla ice cream, going to the Gelatissimos or the Messinas or the Anitas, I think even within that, understanding the landscape of choice, and that you have a particular set of either contacts or familiarities with one choice, i.e. one bank or one banker, but approaching someone such as yourself who has an expanse of contacts and choices, and to be able to say, we know all the ice creameries, we know all the flavors, French vanilla to whatever your heart's content, and being able to provide that to the client. And I think that's a huge value add, and not something that people often have time and expertise and contacts to break into of their own accord.
Love it. My key takeout point was that idea of trust, which James is so good at developing, and it's the cornerstone for our business. It takes a lifetime to build, as Warren Buffett says, and then an instant to ruin. So you lose that trust and you'll never earn it back. So thank you for joining, and till next time.
See you in the next episode.